Test. Let's make sure my audio works. I think it is. I'm going to assume that it is. Test. There it goes. All right, perfect. And then I'm also going to pull up the live stream on a separate tab. All right, perfect. We're looking at Reddit stock. I was curious about this one. We could see that the stock has declined a lot in value. It used to be 230, a high of 230, dropped 54% ever since the beginning of the year. This high was about February 10th. So, span of 3 to 4 months, we're seeing a 54% drop in this stock. We saw a gap in the candle chart here. We're seeing this huge gap and we saw it get filled. We saw a bullish RSI divergence where the stock made lower lows, but the RSI was making lower highs. We saw a bump in the stock after that reading. And now I was curious about a double top pattern. We see we see this peak here and then we see this peak here. And then now this is kind of like our baseline or our neckline. But we did see a bounce. We did see a bounce off of this 94 line. So we could see a projection higher, maybe hitting this wall right here in yellow. But this 54% drop could make it a nice entry point, given, you want to buy stocks at discount. You want to buy stocks that declined in value. And now we have to ask, why did it decline in value? Did it decline in value because the fundamentals are declining? And if they are, then maybe it is valid that the stock went down. Or maybe it's too much hype, right? Reddit had an IPO, and then there's the AI boom, there's too much hype, and then people started selling out, right? So I'm curious about doing some analysis on this stock. So let's go to our spreadsheet. And I'm going to use TIKR as my data source. All right, let's look at Reddit. So at least for me, TIKR, they have a free tier. So, like for example, you could see a lot of the data is locked, right? You got to upgrade for a subscription to see historic data. But I think for our analysis, I think this is more than enough data. So check out TIKR. I think I think they make for a pretty good data source. Not a sponsor. Okay, so let's get our dates in there. I'm gonna make this. I'm trying to think how to make this more bearable, um, while also trying to show like everything on one screen. But it's fine. It'll work. All right. So one of my favorites. If you've been watching the channel for a while, you know that one of my favorite ratios is price to free cash flow. So price is your market cap divided by the free cash flow. And you can see Reddit doing a really good job with their free cash flow generation. They used to be negative 54 million in free cash flow. So, money's leaving the business, but now you could see they became positive in 2024. And then ever since then, has some pretty good exponential growth here 29 in free cash flow. And then March 31st of this year, 126.6 million in free cash flow. So far so good, right? We're seeing a tech business that's growing. So I'm gonna copy paste this, and we can also do this in Python too, right? So if you're curious about like how to get financial data using Python instead of doing it this way where I have to like copy and paste, you could check out my coding tutorials there too on intrendias.com YouTube. But for now, let's get the market cap and the free cash flow. So I copied that from there. TIKR also has market cap, I believe, in the income section. So here you go. That's what that's what we're looking for. And they only have it up till March 2024. So that kind of sucks because that kind of limits our historic data all the way to only 1 year's worth of data, which is kind of like what are we gonna do about that? That's fine, right? It's to be fair, it is a fairly new company. Yeah, they might have IPO'd. That might be the reason why they might have IPO'd March 22nd, 2024. That's how far back the chart on Google says. Okay. So I think this is the max that we're gonna get. So if you've been watching my channel for a while, you know that one of my favorite financial ratios is price to free cash flow. So we're going to take market cap divided by free cash flow. We get 274, and then we could drag that outward. We could do the average price to free cash flow, and we get 257 as the average. So this tells us relative to Reddit's historic price action, Reddit is trading at a discount from a price to free cash flow perspective. So if I chart this, better yet, I want to add, let's add stock price. I think, yeah, TIKR offers that too. Okay. I think this will make it interesting because it's like, sure, great, price to free cash flow, the average, right? But what does it mean for us? Okay. So let's do that. And then I want this on, it should, yeah, there you go. Oops. Is that right? Is that right? Am I dumb? Stock price. Okay. We got the stock price. That's on the primary axis. And then we got price to free cash flow on the secondary axis. We got the average on the secondary axis. Okay, great. All right, let's make this more legible. So this is the primary axis. So this is the stock price. And then this is price to free cash flow. So what are we seeing here? So we're seeing that the average, right? Average price to free cash flow is around 250. And we're seeing the current most recent price to free cash flow using the most recent quarter free cash flow generation and the market cap is below this average, right? So from a pre price to free cash flow perspective, Reddit is trading at a discount. Even if the stock price is up here and it used to be down here at 60. So we're seeing, although an increase in Reddit stock, right? Reddit's now at around $100 a share and it used to be 60. Even with that $40 increase, Reddit is still trading at a discount compared to its historic self. So we can say we're trading at a discount. Because we're seeing from a percent change, we saw price to, or excuse me, we saw free cash flow grow 333% from March 2025 to March 2024. So, so this is quarterly data. This is quarterly data. And let me actually make that bigger so we can actually see what's going on. Right? The stock price increased 100%. March 2024, we were at $50 a share. Now we're at $104 a share. That's a 100% increase. The price to free cash flow has outgrown the stock price. It's up 333%. So even though we're seeing a double in stock price, we can still say that the free cash flow is trading, the stock is trading at a free cash flow discount because of that exponential free cash flow generation that this stock is performing. We could look at some other. We can look at some other ratios. For example, let's check out EBITDA. So I'm going to get that from the income section. And then I also want enterprise value. I wonder if I have to calculate that myself. Yeah, so we need market cap plus total debt minus cash and cash equivalents. So let's drag this down, get cash and equivalents, get total debt, get market cap. But we already have market cap, so let's actually drag that back up. So we got enterprise value, which is equal to market cap plus total debt minus cash equivalent. And then we're going to input cash and equivalents. I can get that from the balance sheet. So cash and equivalents looks pretty decent. 930 starts here. So just to show what I'm looking at. Steady growth, right? We're seeing a high amount of cash and equivalents here. So I'm going to assume something unique happened in March 2024, kind of like a one-time thing. And then we're seeing steady, slow growth in the cash pile of this company. We went from 467 million to 635 million quarter for March 31st, 2025. So there's good growth there in Reddit's cash and equivalents. So that's going to be part of our enterprise value. And then finally, we need to get total debt. So I'm going to stay in balance sheet. And I might just have to use total liabilities, the total liabilities line item, or, yeah, that should be fine. We'll try that. Okay. So that's our enterprise value. We're taking market cap plus the total debt minus cash and equivalents. And we cascaded that. And then we can calculate EV over EBITDA. So let's start here. So negative 12 for quarter one, 2024. So this is huge growth here for the EV to EBITDA, right? So 690 is the average. Let's say we wanted to know what the EBITDA average was just for the positives. So we could take that and only do it on that. So just right off the bat, we can say from an enterprise over EBITDA multiple, Reddit's trading at a premium relative to its historic self. We're seeing this huge growth. So let's see what's causing this growth, right? So that cash equivalence has declined 34%. The cash used to be 968 million in quarter 1 2024, and now it's only at 635 million. So that 34% decrease, because in enterprise value we minus out cash because the operational value of cash just sitting there is zero. So that's why we minus it out. So the negative 34% is going to cause that enterprise value to increase. And then we're also seeing the debt increase, which is not automatically a negative thing, right? We're taking that debt and then Reddit can, increase operations or hire people or, increase data centers or what have you. So this decline with this increase is going to cause that EV to increase, and that's our numerator, so that's going to increase the value. But then not only that, we have enterprise value, or excuse me, EBITDA at only 7 compared to 57 the previous quarter, and then negative. So that's our denominator. So a smaller denominator is going to cause that value to increase. So from a price to free cash flow standpoint, Reddit is trading at a discount. But from a EV to EBITDA, Reddit is trading at a premium compared to its historic self. Because we are all the way up here when the multiple used to be all the way down here. So we can even consider this a valuation divergence, right? Because we're seeing price to free cash flow, the trend is facing downward. So if I just drew a line here, right, the valuation is going downward for price to free cash flow. But for EV to EBITDA, we're seeing that valuation increase. So we're seeing this divergence in different valuation ratios. So previously we calculated free cash flow, which is how much cash the company generates after capital expenditure. So this discount means the market is paying less per dollar of free cash flow than usual, and this is where undervaluation could be considered. But EV to EBITDA reflects the company's valuation relative to core operating profitability. So investors are paying more per unit of EBITDA compared to the past. This might imply investor optimism in the stock. So Reddit may have high growth expectations from the market, causing EV to EBITDA to be trading at a premium. I would highlight the discount on the free cash flow because we saw free cash flow increase 300%. Clearly, the operations are doing very well. And we can couple that with the market's excitement for future growth. So let's try another one. We can do price to earnings, or I could do price to sales, actually. Let's do that. So we can get revenue. Just so that you see what I'm looking at. We see revenue, nice steady increase, right? Looks very predictable. We started off 2023, 183 million, and then that has increased to around 400 million March 2025. And we had a peak in December. So these are the charts you want to see, right? Investors love, the stock market loves predictability. You see this very nice trend to the upside for revenue. So let's copy revenue into our table of data. And then with this, we can say price to sales. And we don't have market cap data until here. So let's start here. So we get 32, value of 32. Gonna cascade that outward. I could say average price to sales. And I totally butchered that name. 43. Okay. So it looks like we're trading really close to the historic price to sales average on Reddit. And revenue has increased 47% since last year, 2024. 32, or excuse me, price to sales has increased 47%. Revenue by itself increased 61%, 242 million to 392. Price to sales ratio has increased 47%, 32 to 48. So I think what has been interesting is we're seeing the free cash flow, the underlying fundamental, increase 333%, while the stock price has increased 113%. So the fundamentals are outpacing the stock price itself. Same with revenue. We're seeing revenue increase 61% within the year, but the price to sales has only increased 47%. So the ratio is only up 47%, but the fundamental is up 61%. So the fundamental itself is outpacing the ratio. So let's plot our price to sales and our date there. And then we get this chart, right? So price to sales, right? We peaked in December 31st, 2024. So let's actually go back to what the stock chart looked like quarter 4. So if we went all the way back, December 31st is right here, right? So noticing how notice how back in December of 2024 we had price to sales trading at a premium. We also had price to free cash flow trading at a premium, right? December 31st, 2024, the value was 163 when the average is, or excuse me, the price to free cash flow was 321 when the average was 257. So price to free cash flow was at a premium. And EV to EBITDA was actually at a discount. So 2 out of the 3 financial ratios were trading at a premium back in December. And we saw that the stock did get some excitement, right? We saw a great boost there. But overall, since this quarter result, you'd be down 36%. So perhaps using these financial ratios, seeing what the stock trades for at the average, and if it's trading at a discount, it could be considered a buy, depending on the underlying fundamentals, see how they're doing, whether or not you believe in the stock for the future long term. If it's trading at a premium, maybe the stock is getting bubbly, maybe there's some foaming. Are the underlying assets trading or increasing enough to justify these premium ratios? Those are the questions that start coming into play. But at least from this historic example, quarter 4, 2024, 2 out of the 3 ratios we just calculated were trading at a premium relative to its historic self. And then we see the stock now would be down 36% from this position. But we're seeing good underlying fundamentals with this stock. Free cash flow is up 333%, while the price to free cash flow ratio is down 45% and trading at a premium. Price to sales is up 47%, but revenue climbed faster at 61%. And price to sales is trading near the average that we just calculated here. It's trading near the average where the stock usually trades for. So let's put that chart over here. We could also look at this from an annual perspective. So from an annual perspective, this is actually revenue. I don't know why I typed it in the stock price. So let's put that where it actually belongs. Total debt. I'm just going to use total liability. Oh, actually, they do have total debt down here on the supplemental data section. So let me use that instead. So I might have to go update the EBITDA. So that might change some values. And then unfortunately for market cap, I do not have that data until December 31st, 2024, so I can't calculate EV. But even from the annual perspective, so instead of quarterly, we're looking at annual data. We're seeing great results for great execution from Reddit. Free cash flow used to be negative 64 million, now 313. Well, last 12 months. So let's instead say 215 million. Cash and equivalents has increased 400%. Total debt has only increased by 34%. But again, debt is not a bad thing in and of itself. And then revenue is also up 468%. So the fundamentals of the underlying is really good. So now that I actually found where total debt is, I think they only offer that in the annual. Oh no, here it is. I found it. Total debt. So just so that you know where I'm grabbing it from, supplemental data section, total debt. So 26. Looks like it stays and hovers around 26. And I get that data for September. Okay, so let's see how that changes. Okay, that's better, right? Total debt 5%. So what does that do to EBITDA EBITDA? It still says that Reddit trades at a premium. Why? Okay. So it still says it trades at a premium. So that didn't really change much. Okay. So we have price to free cash flow at a discount, EBITDA EBITDA is still at a premium. Price to sales is trading near the historic average. So I think now what would be interesting is calculating these financial ratios on competitor stocks and see what the basket average is. Alrighty. So let's think of competitor stocks that are comparable to Reddit. So Reddit, right? It's a forum company, social media platform, right? So I think Google could be a valid answer, right? Instead of searching on Google, you might search on Reddit for an answer to something. Since they are a social media platform, I think Meta would be a valid candidate. So, what are some competitor stocks? That's crazy. BuzzFeed has stock? What? BZFD? That seems so silly. Yeah, that's nuts. I did not realize they had. I mean, I guess that's true. BuzzFeed is like social media, but I don't know if it makes. I guess Snap. That's a social media platform. There you go. Snap. Pinterest. Twitter is private, so we can't use that. Some stock called Rumble. We could try that. Content for content creators and forums. Duolingo, not social media, but content driven gamification. Review based Yelp, that could be a good one, but Yelp specific is specific to like customer reviews, but it's still a forum, right? That can be a good one. Profit margins. Yeah, I'll add BuzzFeed for the jokes. Why not? So I think I'm happy with this basket of stocks. I can go to Reddit and get the market cap, do the same thing for the free cash flow. And then price to free cash flow. We'll get revenue, which is down there. And then price to revenue. Cash. Cash and equivalents. Total debt. So market cap plus total debt minus cash. EBITDA is 7. And we don't have profit margin yet. So I think it'd be interesting to fill this out. And the next step would be is to figure out, given this basket of similar competing stocks, Reddit is a technology company. It's good for searching, so Google's in there. Reddit is a social platform, so Meta is in there. Reddit, you can share story, share posts, kind of like Snap, so Snap's in there. Pinterest, Rumble, Yelp. The next step would be is to understand, what do these other stocks ratios look like? Are they similar? Is Reddit trading at a premium or what have you? So let's go to Google. Let's check out what their most recent market cap was. So for the sake of time, let's do it just on the free cash flow and see what the values look like. So at least for the most recent quarter, and we just did four stocks here. At least from the most recent quarter, Reddit has a high price to free cash flow compared to its peers, right? We're seeing 126 in free cash flow, 126 in free cash flow, 18 in market cap. So that's 148. We're seeing these well established companies like Google and Meta trading for a lower ratio, right? Google's at 31, Meta's actually 27. So that actually kind of surprises me. In my Google analysis video, I mentioned how the price to free cash flow on Google's at a discount compared to along with other ratios. So it's interesting to see Meta is actually trading at an even lower discount at 27. And then Snap has a really high price to free cash flow ratio of 82. Surprisingly similar market cap compared to Reddit. So with the average of 72, that shows us that Reddit, compared to these three other stocks, is trading at a premium. Whether that's there's hyper growth in this stock and investors are excited and they're willing to pay more per dollar in free cash flow earned from the company. Or this could be an argument to say that Reddit is actually still overvalued even after the 50% drop. So it could go either way. But I think it'd be interesting to calculate what the other stocks are and perhaps to include some of the Mag 7 here. Because, like, at the end of the day, Reddit wants your screen time, right? So does Netflix, so does Apple, so does Meta, so does Snapchat, right? So perhaps it doesn't really matter what the medium of entertainment is. At the end of the day, Netflix wants your watch time, your screen time, just as much Reddit does, right? So I think it can be valid to add Amazon and Netflix and Apple into this mix. So this gives us a nice basket of stocks, Mag 7s, high tech foundational companies, along with other players in the space like Pinterest and Yelp and all that. In the future, I'd like to come back to Reddit and either do like a video, kind of like showing what we did here, doing a fundamental analysis video on Reddit. If you're curious to see that, make sure to thumbs up the video, subscribe to the channel. It does help the channel and I do appreciate it. So thank you for your time today. Thank you for watching this Reddit analysis video. I'm definitely curious to see what this basket of stocks and what these ratios look like. So far, though, Reddit does seem to be trading at a premium compared to this basket of stocks. Let me know down in the comments if you think Reddit is a buy or sell or hold. Let me know if you're holding or not. And I will see you all in the next one.